Hey everyone, in this video I'm going to go over two trades that we took today for our day trade. So first thing I alerted to my group this morning was this play I was actually sniping yesterday called Oracle. So Oracle Corporation yesterday, you can see 9:30 wick here on the left. You can see yesterday morning it had a great squeeze on up. Momentum was strong, had strong volume, and it kept on going up throughout the day. Now, after about 10 o'clock is when it gassed out and it just kind of stayed choppy, consolidated. You can see over the VWAP level here, which is my purple line. And it finally broke the VWAP, pulled back over to it, and it kind of stayed in this wave motion. Okay. So the first thing I like to do is whenever I see stocks kind of moving like this, up and down, up and down, up and down, I can tell already that it's kind of in a range. So first thing I do is I take my drawing tools. In this case, we'll take the horizontal tool. I'm going to find where the top of that range is. So as we can see here, we have clear resistance right over here between these four top wicks. So I place my range right there. Now let's find the bottom range. So for my bottom range, it would be right here. All right. So the range is where most of the candlesticks are touching and respecting. So we can see clearly that on the bottom here, it broke the range, but then it pulled it up, retested it right away, and still stayed within this motion. So this morning, when I looked at this setup, I wanted my entry to be above this level right here. I wanted to break above the range and make a new high. So my initial entry from yesterday was 83.70, but I never got to reach that. So this morning when the market opened, let's see here, market opened on this wick right here, pulled up, momentum was picking back up again. I saw the same pattern repeat as yesterday. Strong momentum from the market open. And I also saw that now finally if I have strong momentum then if I can confirm that with strong volume, then I know that it's going to be a clean breakout. And that's exactly what it was. So you can see right here when it broke this range, my entry of 83.70 was successful because look what happened. After I took that initial entry, Oracle blew up all day long and went straight to $87. If you guys take a look at my IG post on Instagram, you'll see that this trade was over a 400% trade. It was absolutely fantastic. And one thing that I want to show you guys as well is when you're looking at range, when you're looking at stocks that are in a range, one thing you always want to look for as well is the volume. So if I zoom in here, here's the high of the candle right here of the range from the previous day. If I put my cursor right here, look how much volume it had. At about, move this up. Okay. So this volume bar right here had about 150K rounded up. As you can see, this volume. And my volume bar didn't even touch my 20-day moving average line of my average volume. So we can see why it never broke out, because it had weak volume. But then this morning, if we take a look at the wick that actually did break out, and we'll put the cursor on the volume, take a look at that. So we had 160K. If we round that up, that's 160K. And it was over the 20-day moving average line. So when you have strong volume confirmation, and especially the keyword is rising volume, when you have rising volume leading towards a breakout, that's when you know that it could be a possible good entry, and the stock wants to run up from there. And that's why we played Oracle today, and I let my members know about this play. So that's something you should look out for. Draw your horizontal lines, find that good volume, make sure things are over certain indicators like on here. For Oracle, as you can see, it was also over my VWAP line. So because it was over my VWAP, I was able to enter this trade. If it wasn't over this and it broke my key pivot level here of resistance 1 and got over my range, those are all strong confirmations of, okay, this is going on an uptrend. So that's my recap for Oracle. And another trade I wanted to do a quick recap was right after this Oracle trade, I also posted this announcement right here, AMD puts minus 94, strike 93 puts for this week contract expiration date. So when we got that initial break on AMD, okay, so if I zoom back in right here, so here's AMD in the morning, okay, and as you can see, it was kind of consolidating, leading to making a new low. Now, what I liked about this play the most is the fact that it here on this wick at 10:15, it hits my 9 SMA line. This white line is my 9 SMA. Whenever you have stocks that are in a strong downtrend, or at least want to continue going down, when stocks pull back up to the 9 SMA and they reject that level and then make a new low or come back down, that confirms that that stock, or that confirms the price action that we still want to, that movement it still wants to go down. It's not ready to go back up yet. And because I had that 9 SMA rejection and then we made that new low, my alert was for AMD puts minus 94. So at the break of 94, as soon as AMD broke 94 is where we would have entered puts. We were already in several open trades, so I didn't want to overtrade, but I know we had some members catch this play because I posted the analysis behind it. And as you guys can see, as soon as it broke 94, look what happened. The MACD was on the downside, MACD crossover was on the downside, and its momentum on the downside also was picking up. RSI was not, RSI was getting near oversold, but the momentum pushed it to extremely oversold. And it ran all the way down. So from 94, it went all the way down to 91.85, pulled back up, and look what happened here. See, the next time it hit the 9 SMA, this is what I was talking about earlier. So here's the first time it hit the 9 SMA, pulled back down, and ever since then it never hit this 9 SMA until 11:15, so about an hour later. Okay, and here at the 11:15 wick, you can see it hit the 9 SMA, and look what happened. Continued to go down, made a new low, right? Because the previous low was right here of 91.86, made a new low of 91.50 basically, and then it finally started to climb on back, kept on rejecting, respecting the 9 SMA, did the same thing over again, and then finally broke down, made a new low. So most of my members got out right around here at 92, right here. This is where they mostly got out of. But this is how you can stay in a downtrend channel. When you see, or not downtrend channel, but a big downtrend move. When you see stocks that are continuously making new lows, respecting the 9 SMA line, and it keeps on rejecting it, that's how you know you can stay in a trade longer. Once that 9 SMA line is broken, like here, if I was holding my contract in position all the way through, then I would have got out right here because it finally broke over the 9 SMA. And if the price action and volume here was strong, it could have kept on going up. Because it wasn't and it was weak, and SPY and QQQ as well kept making lower lows, the market just continued to tank throughout the day. But yeah, just wanted to give a recap about these two trades that we took in our group. If you're interested in options trading and you want to learn how to do analysis like this and basically just trade based on fundamentals and technical analysis skills, then you can check out our group. We offer a 7-day free trial, and I give you hands-on experience and post these type of chart setups and also help you set them up yourselves on your end so you know what to look for. Thank you for watching, and I'll catch you guys next time.